LTC Properties stock, ticker symbol LTC. This stock is down 8% year to date, underperforming the overall market big time. On the 26th of October, LTC presented quarterly results where they reported a beat on revenue, but just missed barely on FFO expectations. And people love LTC stock because of multiple reasons, one of them being the dividends, and I understand why with dividend yield at 7% and monthly payouts. So could this be the perfect moment to buy LTC stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does LTC do? LTC Properties is a healthcare facility real estate investment trust. The company operates one segment that works to invest in healthcare facilities through mortgage loans, property lease transactions and other investments. When we check the most recent earnings report, we see that revenue was reported at 49 million, a steady increase from 43 million in 2022. To me, this looks really good. Earnings per share were reported at $0.54, up from $0.33 in 2022. Looking really good to me. On the 6-month chart, things look pretty interesting with a decrease actually. One of the most important numbers for REITs is the FFO. In here, we see that it is reported at $0.65 per share. Again, a steady increase from 2022. To me, this looks pretty good. In here we see that LTC has 29 operators in its portfolio active in 27 states with a total of 208 properties. In the portfolio, roughly 53% of the investments is directed to assisted living, while 45.6% invested in skilled nursing. In total, roughly 65% of the investment type is owned in the portfolio. Mortgage loans represents 22%. And when we check the revenue breakdown, we see that assisted living represents 37% of the investment, while representing 30% of the revenue. For skilled nursing, it is the other way around. 27% of the investment while representing almost 33% of the revenue, being the biggest revenue source. In here we see the operator diversification. The top 10 operators represent roughly 77% of the annualized actual cash. And on an individual operator level, I was hoping to see a bit more diversification, to be honest. Prestige Healthcare and ALG Senior both represent more than 10%, which is something that I don't like. In here we see the occupancy rate. It is increasing in small amounts quarter over quarter. Keep in mind that this industry has lower numbers versus other REIT industries. Another important number to me is the debt to EBITDA. I prefer this number to be in a range of 5.5 to 6.5 and it is sitting at 6 right now, looking really good to me. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. LTC is a 1.35 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. Right now it is sitting at 12, indicating they might be undervalued. Later in this video I will show you my 3 price targets for LTC stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 194 million and in this graph we see that revenue went up in the long run. During the lockdown periods revenue went down a bit. We see that margins were pretty steady back in the days, but most recently it is going up and down a lot. Especially most recently we see a big drop. Keep an eye on this number. EPS is following the same pattern, so again this is something to keep your eye on. Analysts expect EPS to decrease in the coming years, which is very interesting, especially 2023 is a big decrease. For the revenue, it is looking really interesting with a big increase in 2023, but after this year it is expected to see only a 2 to 3% growth. Return on assets is sitting at 5.9%, which is a decent number for a REIT. Return on equity looks good, and the most important number, return on invested capital, is sitting at 13.4%, which is a great number. Also because it's significantly higher versus the 5-year average. Current ratio is at 12, which is a high number. To me, this could be a potential red flag, so keep an eye on this number. Right now, LTC has 956 million in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. LTC has 11 million in total cash, so they can't pay down a big chunk of their total debt. This is another potential red flag to me. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. But it is not really steady and consistent. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 7%, which is a great number. Also, LTC pays a monthly dividend instead of a quarterly dividend. Annual payout is at $2.28 and payout ratio is at 86%, which is above the average for REITs, so keep an eye on this number. The 5-year growth rate is at almost 2%, which is a low number. But since dividend yield is already at 7%, I don't mind that much. There are 0 consecutive years of dividend increases. In here we see the dividends paid since 2018. The interesting thing is that ever since 2019 there were no dividend increases anymore. To me, this is not a good sign. In this graph we'll see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to stay at current levels. Overall these dividends look really interesting to me, but how about the historical returns? I decided to compare LTC stock with the overall market, in this case the S&P 500. Next to that I added CHCT and CTRE. On the 5-year chart we see the exact problem that LTC is having. A minus 2% return, and keep in mind this is including dividends. The S&P 500 returned 82%, beating all the stocks in this list. On the 1-year chart it looks pretty interesting again. LTC sitting at a minus 11% return. CTRE had the highest return with 27.8%. The S&P 500 did also very well with 16%. On the 6-month chart it is again CTRE having the highest return, while LTC is finally returning positive numbers with 5%. On the 1-month chart it is again CTRE and the S&P 500 having the highest return. LTC reported 3% return, which is very nice. So bottom line, LTC underperforms the S&P 500 big time, both short term and long term. So could this be the perfect time to buy LTC stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 4, 5 and 6% based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 38, 40 and 42%. For the free cash flow margin I'm putting in 46, 48 and 50%. For the PE ratio I'm putting in 14, 15 and 16. And for the price to free cash flow I'm putting in the same numbers. My desired annual return is 15% since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here. Right now LTC stock is at $32. I hit analyze and we see a lot of red numbers. And since this is a REIT, I'm only focusing on the discounted cash flow value. We have a low price target of $23, which is a big drop from the current stock price. We have a mid price target of $27 and we have a high price target of $31. To me, the mid price target is the most justified here, indicating that this stock is overvalued. My final conclusion on this stock is that there are a few problems. Of course, dividends are looking really attractive with monthly payouts and dividend yield at 7%. But the problem that I have with this company are too big for me right now to start a position. Debt is way too high compared to the current cash levels, and this is also the case with the current ratio. It is not looking healthy. Another big problem to me is the return including dividends. In this is really important. Even with dividends, your return was minus 2 or 3% on the 5-year chart. So for me, it is a no for now. Valuation isn't there and the returns are neither there. I will keep analyzing this company from time to time to see if things are changing. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.